Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Morning, everyone. Welcome to another edition of Real Talk with Real Estate Pros. Looks like my producer there in the back has got some good new bumper music for the intro of the show for the new year. So give a shout out to my producer back there, Zach, for his help. Well, we've got another great edition of Real Talk with Real Estate Pros lined up for you today. I would like to say thank you all very much for subscribing and liking the show. And I would like to also start out and say, if you would, please do me a favor. If you're not already subscribed, please subscribe. Say something in the chat, like, and share this with other folks. Once again, I created this show for a place where you can find out what's going on in the world of real estate and finances, mortgages, and credit. Because at the end of the day, the people you see on your newscast and your television really aren't involved in this industry. They're just actors reading a script. And I'm here to bring you the experts who can give you the information you need so you can make an informed choice in the world of real estate, finances, and credit. And with that said, we are at the end of the month, and we always like to have a show to where we are bringing on a guest, Greg West, who is he's been in the world of credit for, over 30 years. And I like having him on as a guest because he gives us some more depth on what's happening in the world of credit. And with that said, I'm going to bring on Mr. West today. Mr. West, thank you very much for being here.
Thanks for having me back. It's always a good time.
I appreciate it. And we've got a lot of good news we're going to be diving into today. We're going to be talking about what's happening in the world of mortgages as well as credit now that we have a new administration in office who, from what I'm hearing from a lot of folks, is saying there's going to be a lot of changes going on.
That's what I've heard. We'll see how it goes. Good or bad.
Yeah, it's always up in the air on what's going to happen. And just so people know, yes, the president does have a little bit of control over things. But at the end of the day, when it comes to the world of interest rates, not as much as control as a lot of people believe.
Exactly.
Well,
very little, actually.
Shh, not supposed to say that, Greg. Those news people will get upset if you say that.
Mm-hmm.
Well, with that said, let us dive into our first news story here. And this is hot off the presses from MSN. No more government assistance. Mr. Trump is putting a freeze on everything, with the exceptions, of course, of Social Security and Medicare benefits. Talking about government assistance and also talking about government insurance of things. And I've been having a lot of questions being asked of me of, what is this going to mean for the world of mortgages? Because if you get a mortgage, whether it's FHA, VA, as well as USDA, guess who insures those mortgages, Greg?
The Gov?
Yes, sir. And I'd like to share here with what my head underwriter shared with us yesterday as well. This is from the Federal Housing Administration, Department of Veterans Affairs and Rural Housing Service of the Department of Agriculture, short USDA. Must clarify that on January 27th, the OMB, that's the new group that Trump's put together, the Office of Management and Budget, memo calling on federal agencies to temporarily suspend payments for federal grants, loans, insurance, and loan guarantees does not apply to single family and multifamily loan insurance or guarantee programs at their agencies. As of today, I have not heard anything back. However, do I think that we're going to lose the insurance on our FHA, VA, and USDA programs at this time? No. I honestly don't think that's going to happen, nor do I think that this administration or any administration in their right mind would shut that down, because FHA is a incredible loan program that was designed years ago to give the insurance to we, the banks, to help people, a lot of people that are first-time home buyers, be able to buy a home. And that's just something that I don't think we're going to see. However, at this date, Wednesday, January 29th, I have not heard that that's not off the table, but I just don't think it is going to happen.
I would hope not. That would be crushing.
Yeah.
To the whole economy. I mean, talk about demolition. That would be bad.
Yeah. That would not be a good way to start off the presidency, no matter who you are, by, hey, we're shutting down. could put a train wreck in things. But we can also talk about, speaking of Trump as well as housing, Trump has been talking about going through and making a lot of changes in the world of housing. Years ago, when we had that last mortgage meltdown, which seems like yesterday to me, but it's actually quite a long time ago. Do you remember the great years of 2007 and 2008, Greg?
I sure do. Actually, my business still hasn't recovered from that.
That was a interesting time in the world of mortgages. And what happened was, what the Obama administration did was they took the big boys, being Fannie Mae and Freddie Mac, into conservatorship, which means the government's in charge of it. And the government was also reaping the benefits of the revenue that came in. Well, those two entities are still under conservatorship as we speak. And Trump is talking about removing that and taking that off the table and letting them go back to being run by their corporations themselves. So that's something that is on the table here and could be very interesting. And he's also, well, I hate pop-ups. He's been talking about, bear with me, go through this here really quick. Okay. Here's Trump's second presidency could bring major changes to the housing and mortgages, including the end of conservatorship of Fannie and Freddie Mac. UMA's Matt Isaiah sees positive changes ahead, focusing on innovation and consumer access. Yeah, I mean, there's a lot to be said when you get the government out of it and allow the companies to run it. We can only hope, though, that if that happens, we will see some oversight and regulation involved in it, so we don't run into the debacle like we did last time that led up to the great mortgage disaster of 2008.
So from a consumer just watching the same as I am, as far as all that didn't make a whole lot of sense to me, do you see that as a good thing or a bad thing? For a regular guy, Joe Schmo, buying a house?
It could be something that's going to be beneficial to us, because we've had the government involved so much in the mortgage process since the great mortgage crash, but we've also had the government involved in the mortgage process even before the great mortgage crash of 2008. So, I mean, you could argue both ways on how this could be bad and how this could be good. Could we see this bring a drive up in interest rates? That is a possibility as well, too, because, oh, well, wait a minute. Now these agencies no longer have the backing of the federal government, which may make some of the investors who are buying into these mortgage-backed securities a little nervous on buying into them anymore. until there's some consistency. Because you got to remember, we are well over, 15, 16, 17, going on 18 years that the federal government's been in conservatorship of these agencies.
Well, that occurred right after 2008 then.
Correct. That was part of the bailout package that basically kept those two agencies from collapsing.
I can tell you, I'd never seen it before, but I watched The Big Short the other day, which is about that whole event. If there's a lot of truth in that movie, then that's crazy what they were doing back then. That's a good movie to watch. Anybody who wants to have basic explanations of what all mortgage-backed securities and all that crap means. It's a good show.
And that's something I bring up to people because I remember I went through that great mortgage crash, and the news media and the government agencies were pointing the fingers at me and my fellow kind that were in the mortgage broker world and saying this was all our fault. We caused all this problem. And I kept arguing, going, how can we as a mortgage broker, one, we don't have control over underwriting.
Yeah, you're just the sales guy, more or less, sort of.
Yeah, we structure the loans, put the loans together, help the customers understand the loan process, and be able to offer them a loan product that is going to help them and their families with their home buying needs or home investing needs. But yeah. I never had a time where I could go to an underwriter and go, hey, Mrs. Underwriter, I know these are the rules here. I know these are the guidelines, but for this particular person here, I need you to just go ahead and let's change those guidelines.
No, you guys got thrown under the bus.
Not saying I didn't ask for some bending, but even then, it was when we had a lot more personal contact with our underwriters, and they just give you that scowl look of like, go back to doing your job and leave me alone. But at the end of the day now, yeah, a lot of that was caused by of course, the mortgage banks that were offering those products, as well as Wall Street. And I remember at one point during that, I asked one of the representatives from one of the largest subprime lenders that we had at that time, and as they kept lowering the standards on what they required to be able to lend people money, I asked them, I said, Nick, what are you guys doing? That product that you're presenting to me here, there's a high chance that those loans are going to go into default. And he looked at me and said, John, we can't get enough. We can't give enough of these loans to Wall Street. They are clamoring for these loans.
Watch The Big Short, you'll see why. It's crazy what they were doing. But yeah.
Yeah. But with that said, let's dig a little deeper into this. And this is who President Trump is nominating as Bill Pulte as the next director of Federal Housing Finance Agency. The private equity executive expected to oversee plans to move mortgage giants Fannie Mae and Freddie Mac out of conservatorship. Trump made the announcement on Truth Social. The FHFA is likely to have a key role in handling Fannie and Freddie's back to the private sector, with both government-sponsored enterprises having operated under government control since the global financial meltdown of 2008. Here's something interesting, and if any of you all have ever dealt, and especially here in the Houston and surrounding areas, with any of the local home builders or home builders, Pulte is a major national home builder. And look here, whose grandfather, William Pulte, founded and served as chairman of the home building giant Pulte Group. So the person that Trump is nominating for this his family has been in the world of home building for quite some time.
Guess you could look at that in a good or bad way, depending on if you look at it as experience in that realm or a nepotism, maybe. I don't know. I'm suspect of anything like that, but
yeah,
at least it seems qualified, being in that realm anyway.
Is there something tapping on your end, Greg?
I don't think so, unless I was nervously doing it or something.
Oh, okay. Yeah, I just thought it sounded like there was a drum beating. But But yeah, that could definitely. Oh, I don't know where that could go, but that could be interesting. I mean, I don't want to throw any theories out here, but I'm wondering if when these agencies go back out of conservatorship, if there won't be some special things set in there where home builders will get some preferential treatment on the mortgage side of things.
Well, yeah, very possible.
I mean, I'm just putting that out there on the table.
Business mixed together there.
Exactly. Now, we do something else I'd like to bring up because we've had a lot going on and there's been a lot happening in the world of real estate leading up to where we're at today. U.S. new home sales exceeded expectations. Rising supply curbs housing price growth. So we're seeing a lot still happening in the world of real estate. New home sales increased 3.6% in December. About 683,000 new homes sold in 2024, up 2.5% from 2023. Medium new home prices rose 2.1% to $427,000 from a year ago. So as of January 27th, sales of new U.S. single-family homes increased more than expected in December. So this is still very positive signs for the housing market on what's happening as far as valuation. Here's something, though, that I would like everybody to keep in mind. And we'll bring up this article next, which I think will be very interesting about what Trump is wanting to do, is when the economy is moving forward and things are doing good, and from what a lot of businesses are saying and what a lot of people are saying from what we're seeing from the new administration is this could be good for the economy, but it could also cause inflation, which is a big possibility. But if business is doing well and companies are doing well, that does not bode well for long-term interest rates to come down anytime soon.
Yeah. Well, you can't have both. You can't have you got to have one or the other. That's the way it works. And it all has to do with that, as we've talked about before, the 10-year yield of securities. They when people panic and they want to put their money into something long term that's stable, which means they're probably scared. They don't think there's other good opportunities out there. They buy them. The yields will go down, and of course, if they sell off and go back in the economy, yields go up. That's basically how it works. It's all about risk and their appetite for it. So yeah, you can't have it both ways.
Exactly. But with that said, this is from the trusted Associated Press news source. Trump says he will demand that interest rates come down, but it won't be that simple.
Well, they got that. It won't be that simple part right.
President Donald Trump has pledged cheaper prices and lower interest rates, but an economy transformed by the pandemic, will make those promises difficult to keep. Economic growth is solid, which we were just talking about, driven by a healthy consumer spending, which we could touch on consumer spending here just a little bit. A lot of that consumer spending, though, has been on credit cards. Have you been seeing that in your business, Greg?
Oh, 100%. Credit card debt's at record highs, and you're going to spend more when crap costs more. So yeah, the numbers are all skewed. You base everything in dollars and you keep getting more dollars in circulation. It just makes everything rise. Like even homes, metals, anything you invest in. The reason dollars just don't go away, they go wherever the yields are at. So stuff goes, the more money print, they don't actually print it. It's just created out of nothing with digits. But generally, the more money coming in creation, it causes everything to go up because you're pricing it in an inflationary product, the dollar. Basically, like when you see the Dixie go up or down, which is the comparative strength of the dollar. They're comparing that to other fiat currencies around the world. So basically, you just our dollar is the best of the polished turds. I guess the best way to put it. The dollar's not getting stronger; it's just getting stronger against other currencies.
So. And we've seen since the past 4 or 5 years now, with all the things that have happened, a lot of the world, or actually most of the world's currency, has lost a lot in the valuation of what's happened to it. Not just the American dollar.
Yeah. Well, they've had to keep up to get the dollar because a majority of countries still have to use the dollar for a lot of different things. Of course, BRICS could be changing that, but that's a whole nother.
That's a whole nother show. That's a whole nother show. We don't have time to dig into that. But
get into that.
Yes, but going on to this, and if Trump follows through on his promises to impose widespread tariffs on imports and deport millions of illegal immigrants, economists expect inflation could worsen, making it less likely the Federal Reserve will cut key interest rates later this year. And that's something else I'd like to let everybody know. The short-term rates that the Fed is talking about, that they're lowering, in which they are meeting today, and 99% what we're all predicting will happen is they're not going to change the short-term interest rates. That really does not have an effect on the long-term interest rates, because over this past year that they've been lowering the interest rates, every time they lower those short-term interest rates, the bond market sells off and the interest rates go through the roof, which causes us major havoc in the world of the home financing side of things.
Absolutely.
So, I mean, and we're getting to the point now where we look at things that are happening and go, okay, we have to get the message out there to everyone and let them know that, look, just because the short-term interest rates have lowered does not mean that the long-term interest rates are going to come down. And when the bond market is selling off, that causes a major, major problem.
Yes, it does.
And it looks like I have frozen on my end here for everybody. Bear with me just a sec, everybody.
Yeah, you're a statue. I can still see it. It's not moving.
I'm going to see if I can't fix me. No, I have completely frozen.
That's okay. As long as you can move on to the next story or whatever.
Exactly. Well, what I'm going to do while I fix this is, Greg, we're going to move into something that you are the expert on, and we're going to move into the wonderful world of the credit reporting agencies. And this has been a big topic over the past year, is the medical bills.
Yeah, it definitely has been. And I wanted to talk about it some because it's not 100% set in stone, although most likely will be. It had to do with the fact that there's a 60-day time frame. If you go down through there, what I wanted to focus on was they will, as far as be removing, as it says there, 49 billion in medical bills from credit reports of about 50 million Americans. Which in essence will help, according to this article, 22,000 more mortgages a year because it'll raise up credit scores. Now, this has been reported on and it's been all around TikTok and social media. So everybody thinks it's a done deal, and it may be. But if you go on to the next page there, John.
CFPB's recent rule eliminates medical debt from the credit reports. And the CFPB, so everybody knows, is the Central Financial Protection Bureau, one of the wonderful agencies that every one of us in the mortgage world loves and think can do no wrong, is in charge of. I'm sorry, I had to get that disclaimer out there, sir. I hope you understand.
Oh, I hear you. Well, what's going on is that if you read a couple paragraphs down, it says the rule is currently facing at least 2 legal challenges. ACA International versus Consumer Financial Protection Bureau filed in U.S. District Court of Southern District of Texas, and Cornerstone Credit Union League filed in U.S. District Court for the Eastern District of Texas. That was interesting. They're both in Texas, but anyway. And what they're saying is the CFPB has overstepped its rulemaking authority, which is the ultimate duty of Congress. And they're also arguing the consequences of excluding medical debt and credit reporting could impede on the accuracy of credit reporting systems and make it more difficult to determine individuals' credit worthiness. And so, in essence, there's still, from our last, I think I did a video or a podcast we did last month about this. There's 60-day time frame on this rule, which is scheduled to become effective March 17th. So we'll see if these lawsuits end up changing that time frame or not. So technically, this whole thing can be reversed. It had to do with some rule about a new administration coming in and have 60 days to reverse any sort of rules from the previous. So odds are it'll go through, but don't count on it just yet. I wouldn't go just purposely not paying your medical bills to keep them from collection and whatnot, assuming that they won't be on there, because they still could at this point.
Well, I can bet that a lot of us would agree with this, Greg. I think as well as you too.
Oh, I do. I think it's a good thing if it stays off of there, for sure.
Yeah, at the end of the day, how many of you all have gone to have a medical procedure done or gone to a doctor's office expecting to pay X, and then the next thing you know, later in the future, a month, 6 months, a year later, you get a surprise bill out of nowhere that says, oh, by the way, you owe us another $500. You owe us another $800. You owe us another whatever it is. And it causes a large problem, and especially now as we've seen inflation just go through the roof over the past 4 or 5 years. Who has an extra $400, $500, $600 laying around to cover a surprise hit like that? And that's something that, I mean, this could be a whole nother show, is talking about how to change the medical industry when it comes to the insurance/billing side. I mean, I wish our government agency would get involved like they did in my industry, and going over how pricing works and going over how the fees work on the loans, and having to fully disclose to everyone that information, which is fine. We all want full disclosure, but that needs to be done on the medical side. Is, hey, Mr. West, if you're coming in for this procedure, this is what it cost, this is what insurance covers, and this is your total out of cost.
Mm-hmm.
Right there.
Yeah. But instead you get bills from radiologists and urologists and doctors and person reading this and that, and just thousands of dollars for whatever. It's ridiculous. But it's been that whole industry's been like that for decades. It probably ain't going to change, unfortunately.
No. And I mean, it really needs to happen, because there's things like with my industry, if I disclose to you, and this is what I tell everyone, when I send out the initial preliminary disclosures, we are estimating everything on the high side. And the reason for that is if I don't tell you of a possible fee that could come up and don't give you advance notice of it, Greg, well, guess what? If that fee comes up, guess who has to pay for that fee? I do.
Yeah.
And yes, we've all had to do that. Nobody's complaining, but it should be the same thing on the medical side of things as well. Yeah. Hey, look, unless you have to go in and get a surgery right now and go, oh my gosh, I've just fallen down the stairs and my leg's all broken up and I need immediate surgery. Okay, maybe that's a little bit different story. But if you're going in for a standard, normal doctor visited procedure, we really need to see a lot more clarity on that stuff.
Agree 100%.
So, and then we have this other article here that we've been talking about. You and I personally have been talking about the CFPB sues Experian for sham investigation of credit report errors, which, Greg, this is something that is near and dear to your heart on the credit repair side of things.
Yeah, all I can say is about time. These clowns have been doing this for 3-4 years. It got even worse after COVID, hopefully your video will get taken down. C-19, whatever, when everybody started working from home and whatnot. And TransUnion's been doing the same things. I can't believe they weren't sued either. But if you've tried to file a dispute and you've got some sort of letter that says we appreciate your efforts were suspicious. This looks like it's not been sent by you. I was getting letters left and right, or my clients were as well, saying they're just not going to honor investigations. And I'd have to do something 2, 3, 4 times to get the same results as once pre 2020. So, yeah, it's about time, but hopefully they'll find the crap at them so they'll stop doing it. But they need to go after TransUnion as well. So, yeah, if you have done your own dispute in the past, it's worth going back in again because they may not have done it correctly the first time. So at least they're doing something to help people out with that mess, because it has been a mess for several years now. And I have theories on that. I think that's because they're just trying to push everything into a digital realm to where paper's gone. But again, that's another story for another day. But yeah, I'm glad to see they're government agency finally doing something helpful.
I know you and I have had this conversation for just full disclosure here for everyone. Greg and I have known each other for well over 25 years, and Greg has pretty much my entire career been my go-to source on the credit repair side of things, because in my business that I'm in, I run into people that have some dings or some hiccups on their credit, and it's nice to have an expert in my corner who I can trust and rely on to sit down with people, review their credit. And in some cases, how many clients have you and I, or have I been working with that I've had you review and you've had a consultation with them and you've told them, you really don't need to hire me or pay me to do anything. Just do these few little things here, and that should get you to the score that you and John were talking about to be able to get the best loan for you.
Probably hundreds. I don't know, maybe thousands. I don't know. Never kept track, but a lot. Yeah.
Exactly. Now, there's also thousands of people that you've helped go through your program, go through your system, and allowed people who didn't think they could buy a home before become homeowners.
Yep. Especially now, the credit building is a bigger priority than it used to be, and there's so many options out there. It has become easier in that sense as long as you do it properly. You just got to be careful. There's a lot of, I won't say scams, but there's a lot of, it's one of those deals where everything you do anymore, you're clicking some sort of button for terms and conditions, and people don't read anything. So anytime you're signing up for any credit building scheme of some sort, you've got to pay attention to the details on that stuff, because a lot of people are losing a lot of money. Matter of fact, I had a good friend of mine, and I say good friend because we've talked about him, Chris, that signed up for some credit building thing. They told him it was a $98 fee. And anyway, he signed up and supposed to get a $400 limit, got a $200 limit because they put $200 on the card already. And he called him up thinking it was a scam, but he clicked on the terms and conditions and agreed to it. So he ended up getting a $400 limit, but 200 of it was already taken with some sort of fees, and he tried to cancel it. It's just a big mess. So you got to watch that kind of stuff, man. There's other ways to build credit without getting scammed like that.
We'll help you build your credit.
Exactly. It's a popular thing now, and people don't. It's the dumbing down in school of just basic economics, basic stuff that we should know. We just don't get taken advantage of, and it's going to get worse with AI and stuff.
Oh yeah, we've definitely jumped off the deep end on a lot of stuff with what's happened. I'm amazed at how often I see that come across my desk. And the thing is, and that's once again, that goes back to why I'm doing this show and why I'm bringing on experts like Mr. West to give you guys the true factual information of what's going on. So when it comes to the world of real estate, when it comes to the world of home buying, home selling, credit, mortgages, you have a place you can go to ask questions. That's my text number right up there. Please feel free to send me a text. You can ask questions. Greg, can you go ahead and share with everybody your information so they know how to get a hold of you so they can reach out to you and get a free credit consultation?
Yeah, 2 ways. You can call me directly, 859-625-4546. You can text as well if you want, or go to westcreditservices.com, fill out a little consultation form. I can call you whenever you want. Literally takes less than 5 minutes. It's not a very long conversation, depending on how many questions you have. But I can see what I can do for you. And if I can't help you, I'll push in the direction to somebody that can help you, or something you can do on your own. Don't have to pay somebody to do it.
Well, Greg, I really appreciate you being here, sir. And I'm going to put you back in the green room for a minute while I say goodbye to the audience. And do you have
Sounds
any
good.
last bit of advice you'd like to give the folks before you head back to the green room?
I guess just on the topic of everything we've talked about, of course, we're not financial advisors. Just guys have been doing stuff a long time. Always do your own research on stuff, and anything you sign up for with any program, you've got to read, man, the terms and conditions. I know I talked about this, but it's so important. Make sure you're not signing contracts you don't want to be part of, because all this at some point can come back on your credit. So mainly that, especially with digital, people are doing contracts with by text and all kinds of stuff now. You just gotta make sure you're reading before you agree to stuff.
All right. Well, I appreciate you, Greg. Thank you very much. And thank you all for being here today. I would just like to say once again, thank you very much for tuning in to Real Talk with Real Estate Pros. I would like to also, too, put this out there. That's my direct text number. Please go ahead, and if you know somebody that you think would be an expert to have on the show, I'd love to talk with them and see about possibly having them on the show. Whether they're a real estate agent, whether they're a real estate broker, homeowners insurance, home inspector, let me know. There's a lot that goes on in the world of buying and selling real estate. With that said, y'all have a great day. Please like, subscribe, and share, and all that other good stuff. And we will see you next Wednesday. I have got a great show coming up next Wednesday where I'm going to be diving deeply into FHA 100% loan financing program. Thank you all. Have a great day.
Some people just know they could save